Thanks again for joining me. This is Stephen Choi, and you are joining Trading with Livevol. I want to kind of cover a little bit of what I'm doing here. So I just started this on February 3rd. So I want to tell you guys what I'm trying to accomplish. I have been a market maker in the past, and I built this platform, Livevol X. And this platform right now is being used by market makers on the exchange floors, and what we are trying to do is bring it to the masses. One of the things that people always ask me is, hey Stefan, how do you use this product? So what I'm trying to attempt with this series of Trading with Livevol is I have an account. So I started a Reg T account, and this is when I basically started broadcasting right here on February 3rd. And I'm going to actually go through all the trades with you guys, tell you guys what's happening, and then you can see how my account is changing and how I use the platform to trade. So that being said, so for a while I'll kind of repeat this product. So I'm actually trading my real account, a Reg T account, and these are all real trades with real money. So it is, I feel like nothing is better than a real live example. So what you guys can see is kind of how I use the application to trade and what the, what all the benefits there are to using Livevol X. So let's actually go back to all the trades that I did yesterday. And see what they are. So yesterday I was kind of talking about the Apple trade, 510, 530. You can see that I got filled on this call spread for I think 1150. And the reason I bought this call spread was because of a couple of reasons. One, I was looking at the order flow of Apple, and it was extremely bullish. It was there for the last couple of days. Even today, you can see 164,000 calls, 99,000 puts, and you can see that this person did a 1x2 call spread right here, where they're buying the March 145s, selling 2 of the March 560 calls. So in essence, this person did this trade for almost even. And they think that the stock is Apple stock is gonna appreciate to 560, and he would like to gain $15 from 545 to 560, but he doesn't think it has that much more upside. The reason I bought my spread, and I'll actually show you what I have here. I bought this spread, April expiration 510, 530, and the reason I bought it was because not only was it bullish, but there's a couple of other factors. So when Apple stock announced their earnings and it went down to like around the $500 range, Carl Icahn was buying it before the earnings announcement, and then after the earnings announcement, a few days later, Apple said that they bought a ton of stock as well, which kind of led me to believe that that the 500 area is the bottom, because not only will Carl Icahn support it, but Apple would support it, and I'm sure if both guys support it, there's going to be a bunch of other guys who feel comfortable buying at the $500 range, including maybe retailers, hedge fund managers, etc., etc. So my thinking was, okay, 500 is when they can support it. What kind of spread can I put on that could benefit me? Well, I looked at the volatility. It's at a 52-week low vol, right? So yesterday, Apple was trading around 530. So I wanted to sell the at the monies, which was the 530, and buy this. And my thinking was, it's 2 months to go. It's a $20 spread. I'm paying around $11.50. So in 2 months, if Apple stays at 530 or greater, I'm gonna return like 43% on my investment. If this Apple stock depreciates down to 520 around, I'll break even. And the beauty of this trade, in my opinion, is the fact that I put this on at a very low volatility. So I think before I was telling you guys about this low vol, 20 vol, it's at a, if you look at it, it's at, if you look at the percentile, it's at a 52-week low. And the reason why I like this spread is, let's say, for example, the stock goes down to 510 with a week to go. Well, I know that, for example, if you look at the monies right now, it's around $4 and it's at a low volatility. So let's say the stock goes down to 510 by April 19 expiration week. I would not lose all of my $11, most likely because of the volatility going higher. Because Apple goes down, I might be able to get between $4 and $5 out of that spread. So I would only lose 50. So the whole thing is, if the stock stays around here, I make, or higher, in the next 2 months for Apple, I make 43% return. If the Apple trades between 520 and 530, I make some incremental gains. And if Apple trades 510 to 520, I'll probably lose around 50%. And below 510, I probably have much greater loss. But my thinking is that then other buyers will come in around 500 unless some other news came out and they would support it. So that's why I bought the call spread. In fact, it was so good that I liked it so much, I put in more spread, but it didn't work out. I also saw other people buying other call spread. So you see this call spread right here, Feb 540, 550 call spread. So this is like a week to go, and this person paid $250. Basically, what they're thinking is, and let me actually go to this chart. What they're thinking is that they're betting on Apple going from 540 to 550 in the next week. They'll put up $250, let's say, and have the ability to make $750. So it's 1 in 3 shots that'll go up, and the person is putting down $250. I think it's a pretty good bet. Even if I just looked at the technicals, it's a pretty good bet. Fundamentally, you know, I think it's on a, I wouldn't want to short it now. So I think the momentum is towards the bullish side. And then I look at the vol going, it's staying flat, so it's not upticking. And if you look at the statistics, people are still piling in on bullish bets for Apple. So I was trying to piggyback this person. So if you can see, I'll actually modify it. So you see this Feb 540, 550 call spread. I put it in for $250. This was a while back, and as you can see, I missed it. So there's going to be a lot of trades that I miss, but in the end, when you do get filled, it'll be pretty good. Now, also, I know you guys know I have been trading a lot of SPY. So what I have been doing in SPY is I have been selling the front month. So you can see I've sold the front month put, and I'm buying the back month put, and I'm doing it for even, or for credit. So this morning I did some trade here. You can see the Feb 22 179 put, I bought them, and I sold the Feb 180.5 put, and I sold them for this for 102. I bought these for 102. Now, the amount of trades that I was actually working, you can see right here, I only got filled on 11. So I still have 9 out there, but most likely I'm not going to get filled because the market's up substantially. And my whole thinking of doing this is I like to buy options, and I think most of us do, but the problem is they have decay and they're expensive. So a lot of my strategies on the Reg T account that I have is trying to use the limitation or whatever you have with the Reg T margin requirement, but try to gain options for free or for a very low cost. So you can see I did this call spread earlier when I started the broadcast on February 3rd and 4th, and then yesterday I did this trade 20 lot, the Feb 180 178 put spread, and then today I did the 180 and a half and 179 put spread 11 times. I had it in 20, but I got 11 of it filled. So hopefully it'll work out. I was also thinking of maybe buying a call spread because the market looks so bullish, but I was looking at the order flow and it didn't really confirm for me to be too bullish. In fact, the order flow is kind of mixed, and if anything, they're a little bearish in terms of the order flow itself. So I kind of decided not to put on a call spread and just kind of stick with what I have. So as you can see, this is something for now, at least for this week, I will benefit if the market rises versus falling. As you guys know, I also was following the VIX trade. So a while back, a ton of these traded, the Feb 19, 16, 22, March 18, 16, 26 call spreads where people are buying 6,000 call spreads. And my thing was I liked it, so I was going to piggyback. And this was kind of my hedge against my bullish positions because I have some calls on other things like the Apple call spread and others. My thinking is that, hey, look, I wouldn't mind buying some protection by buying some VIX call spread. So today I actually bought some more because I was thinking of maybe because the SPY spread got me even longer. So if you see all my trades, you see the VIX, March 18, 26 calls. I sold those for 25, and I bought the March 16 calls for 115 for a total of 90 cents. So 90 cents is what I'm laying out to protect myself until March, almost till March expiration, and my maximum is $9.10. So I thought it was a pretty good bet, and as I'm making money on the bullish side, I wouldn't mind putting some of it into the bearish side just as a hedge of my overall position. So if for you guys looking at doing trades that are just bullish and you want to hedge, there's tons of ways you can do it. You can do it with the SPY. You can do it with the VIX. The VIX is a little trickier because it's a derivative of a derivative, and many people got burnt by trading VIX, as well as myself. But it's something I kind of use the order flow to piggyback. So if you can look at all the order flow today, you'll see like the calls are still outpacing the puts. And if you look at most of the trades, and these are like in the middle, so you don't know, but these are they're still kind of relatively leaning towards the bullish side. So 81,000 of the out of the money options were traded on the offer, only 71,000 traded on the bid. And if you look at it, you see 5,000 of this spread where they're selling the 15 calls and buying the 17 calls. This one was my first one that I saw that wasn't bullish on the VIX. So this was my first one of many that I've seen where generally people are betting on the VIX rising. So if you look at the very next one right here, people are just generally buying calls and doing spreads. So if you look at this one, the 942, you can see that people are buying 4,000 of the 18 calls and selling the March 23 calls. And this has been a pretty common theme for the VIX for the past week, where people are loading up on call spread. So As long as people are kind of doing that, I'm gonna take it. I feel like I can spend a little bit of my profit and buy some call spreads, and this gives me protection until March. So if this was to work out, I basically spent, 500 bucks because I bought 5 of these, let's say an average for $1, and I have a chance of making $4,500 if it goes up to 26. So it could be a pretty good hedge against my long position. The other one that I trade quite a bit is Zynga, as you guys know. So Zynga, I had this call spread, and I had a bunch of calls when it appreciated. So if you look at my account, this jump right here was due to Zynga, because I had naked calls, and basically what happened was I am trying to figure out what my next action should be, and my general sense is looking at, if you look at the stats right here, you can see people buying some calls, some people are seller of some calls, but basically it's been relatively bullish on the order flow front. You can see 10,000 calls versus 1,000 puts. My thinking is the stock is going to kind of hang around the 4.5 range. So every time it's gone up, let me see if I can do a year chart. Every time it's kind of gone up to a level, it would hang out for a while before it took the next level up. So my thinking is it's going to hang out here again. And the stuff that I'm working on, which I still haven't gotten filled, is this one right here, this call spread. So let me actually open it up. I'm trying to buy the April 19 4.5 calls and trying to sell the Feb 14 4.5 calls. And the reason I'm trying to do this is if I pay 25 cents, and let's say, let me look at what the premium is. It might be, say, 16 and 61. So there's about 5-6 cents worth of premium in these options, and it's already Tuesday. So on Monday it might be higher. There's 10 weeks. So if I feel like it's going to stay here, and I can keep rolling the Feb 4.5s, I eventually will buy the April 4.5s for credit, and then I can do a lot of stuff with that. Some of the other things I do is I usually put in these puts, but I'm not sure if I'm going to get any. So I'll see how it goes. But I like buying cheap puts. So let's say I'm going to buy 50 of these for 4 cents. And if you own them, you can sell a bunch of stuff around it. But I usually don't get filled on them, so I'll see how it goes. I'm gonna put 50 lot here. If I get filled, that's great. If not, I'll figure something else out. So that's kind of what I'm working on now. As you can see, I'm also working on Yelp. So let me actually address that, because I didn't get any fills yet, but I did kind of come up with an idea. Looking at all the order flow and the volatility. So if you look at the chart, you can see how it had this huge up day, and then it sold off. So every time in the past, maybe this isn't as clear. Every time it had like this huge up for Yelp, it kind of hung out for a while. So I feel like a lot of the good news is in, and maybe Yelp is going to hang out here in the $90 range for a while, for at least a month. So I wanted to take advantage of it by selling some premium and buying some back month, because in a month or so, my hope is maybe the volatility starts going up again. So the two candidates I was looking at was and let me bring it up. It's the March Feb 22 call spread, 92.5, and I put a 315 bid in here, and you can see it's 310 bid at 350. So I'll need to get, kind of lucky to get fill on here. And then I also did the 90 level put spread for 315, this one I might have a better chance of getting filled. So what my thinking is, I'm gonna pay $350, and hopefully I'm gonna get enough premium rolling these week to week that I can actually get that call for free. So you can see this Feb 14 in Yelp is trading on 192.72. Oh, so it's actually trading up. So let me actually take this. What is this? The 90. I'm gonna cancel this 90 because now, since it's trading higher, the 92s aren't as good for me because I'm gonna have to roll something in the money. So I'm just gonna leave the 92s. Maybe I'll think of maybe doing the 93s or 94s. But essentially, what I am trying to do is trying to get options for free by doing some kind of spread. So you can see I'm trying to sell the Feb 22s here, and I am trying to buy the March 22s. And I'm trying to do it for 310, thinking that if I get away with this going out 0, because let's say it kind of goes back and forth, but it ends right here, 92.50, these will go out worthless. The Aprils would decay much less, and then I can go and try to sell these, the Feb 93s, and then if I get away with basically if I get away with 3 weeks, I'll own these for free or for credit, and that's kind of generally what I'm trying to do. So if you see a lot of my positions, and let me see if I can actually address that. If you look at my Greeks, I have this theta. So you can see most of my theta right now, I'm concentrating on SPY. So I'm trying to sell and collect data. And this way, I have 2 ways of kind of making money. One, if nothing happens to the market, and so let's say all my stocks stay exactly the same after every day, I should make around $164. If the market moves, you want to have enough options where you can actually benefit from it. So net, you want to be long options, but you want to get data positive, which is not always the easiest thing to do, but it's something that I'm trying to work on, and I think it's a pretty good way to trade on a Reg T account. As I go, and I'm pretty new on the Reg T side because I've always had an account where I never even worried about margin, but it is actually a good exercise for me, and hopefully you guys can kind of learn from some of my mistakes and benefit from some of the good trades that I do as well. So I'm gonna, as you can see, all of these trades, there's a genesis for it. Usually it's something fundamental and technical, which I think all of you guys are used to knowing, but it's extremely important to understand the order flow, and this software pretty much has the most order flow information anywhere, and volatility. Those 2 factors are extremely important in making any trading decision, and in my opinion, most other softwares completely ignore volatility and order flow, and that's pretty much the 2 main factors that I used when I was a market maker. And for other market makers and professionals, they actually get trained in understanding volatility and options order flow, but for whatever reason, the kind of like the thinking is that the retail client is not sophisticated enough to learn it, but that's crazy. In my opinion, every time you buy even a simple call or sell a call or do a buy right, you're trading volatility and you're also trading order flow. And it's important for people to have the tools to understand what kind of trades other big institutions are making and what they're hoping something's going to happen to the stock that they're trading. So if you guys are interested in taking a trial of Livevol X, all you guys have to do is go to livevol.com. That's livevol.com, and go sign up for a trial for LVX. And I think you guys will be super happy. I think there's also a brokerage account too. So one of the things that's really cool about this product is this product right now, the market makers or the professionals pay $500 a month to use. If you join the brokerage account, basically they give it to you for free, which is incredible in my opinion. But anyway, you can also come to Livevol community and kind of let me know what you guys like to see, or if you have any questions. And also, we are headquartered in San Francisco. So for all those Bay Area guys that want to actually come to the office and see me trade, you guys are welcome to do so. Just contact me at stephenchoy@livevol.com. That's STEPHEN.CHOY@livevol.com, and tell me when you guys want to come by. Other than that, I'll talk to you guys tomorrow.